Now, the topics that we're going to explore tonight, first of all, Malaysia's disturbing wealth gap. Yeah, 2 to 3 weeks ago, I talked about Malaysia's wage crisis, which the Department of Statistics highlighted that 35% of former workforce employees, more than a third of former workforce employees, have a salary of less than 2,000 ringgit per month. And naturally, it occurred to me to do similar research on the distribution of household income in Malaysia. And the results that I found was shocking, but I wouldn't say I was surprised. Okay. Next up, we will take a look at the US Federal Reserve, looking to continue raising interest rates. Now, this is important now because it will determine the strength or weakness of the Malaysian ringgit in the upcoming weeks or months. And lastly, we will settle on MIDF Research maintaining a positive outlook on banks. Yeah, the research firm has set their eyes on Public Bank and RHB Bank, but they're urging investors to be more selective in their picks. So this and more in our weekly analysis as usual, not financial or legal advice. And a quick shout out to all our current learners and gatherers, our patrons. Thank you all so much for your support. Allow me to start with Andrew, Wendy, Edward, Alex, CC, Is, Morpheus, Urshad, Caveman, Balls, Calvin, Kai, Thien, Tommy, Jinkang, Adrian, Eric, JS, Wenyan, Dean, Duhan, Ken, Faris, and Alan, as well as all our learner members. Now, without further ado, let's take a look at the household income distribution in Malaysia. What you need to know. So just let me set up the stage now before I go into the details. Number of households as of 2022 stood at 7.9 million. Now, this represents an 8% increase compared to 2019's figure of 7.3 million. Now, on average, in each household, in each family, right, you typically have 3.8 people. So this is the 2022 figure, and it is slightly lower than 2019's figure of 3.9 people. Okay, so for tonight's purposes, we will just round out the number to about 4 people per family. So it's mother, father, and 2 children. Okay. So the details over here, Malaysia's unfair income distribution. But I mean, looking at this vertical bar chart itself, you already know that the distribution of wealth is pretty unfair. So some highlights over here. 45.7% of families earn less than 5,000 ringgit. Diving deeper, we have 20% of families, or 2 in 10 Malaysian families, they have a total household income of less than 3,000 ringgit per month. And the most worrying part, right? 7.3% of families, they are in the hardcore poverty category. They have a total income of less than 2,000 ringgit per month. So just imagine, 4 people per household, their total income is less than 2,000 ringgit. And what is the poverty line in Malaysia right now? Well, this is as of 2022, it stood at 2,589 ringgit. So this is the absolute poverty line, which is the minimum level of income deemed adequate in a particular country. And for Malaysia, 2,589 ringgit, let me just trace back a few slides, right? We have 7.3% or 467,000 families earning way below the poverty line, below a salary of 2,000 ringgit. Meanwhile, 20% of families, 2 in 10 people, their household income is eerily close to the poverty line of 2,589 ringgit. I mean, this just highlights the worrying wealth gap in Malaysia. Next up, we talk about how much does a household really need. Okay, so how much do households spend on average per month? Well, as of 2022, now this one is also according to the Department of Statistics, households spent 5,150 ringgit on average, which rose 3.7% compared to last year, 2021. And the majority of expenditure come from these 4 main groups, okay? 23.2% goes to housing, water, electricity, gas, other fuels, 16.3% food and beverage, 16.1% restaurant and accommodation services, the remaining 11.3% goes to transport. So this figure, 5,150 ringgit, yet we have 50% of families earning less than 5,000 ringgit per month, which is one of the first slides that I presented for the night right over here. Okay, and this just again highlights that, Malaysian families, a significant majority of them is just barely scraping past, barely surviving every month if you take a look at the average expenditure from households. So the rich there at the top, yeah, more, I would say, disgusting details over here. This is the household income contribution by groups, the top 20%, they contributed 46.3% to household income, despite them occupying 20% of the population. M40 is pretty close, yeah, 37.6%. B40s, this is the alarming part. Yeah, they occupied 16.1% of total household income, despite them occupying 40% of the population. And you take a look at the distribution of wealth, right? It decreases exponentially as income increases, but it suddenly skews towards the rich. And this figure in itself is a bit misleading because within the T20 mark, right, there are quite a lot of families out there who are earning much more than 15,000 ringgit, right? You have families earning easily 100,000, 200,000 ringgit per month, etc., etc. And it's all lumped up in this figure itself, which again highlights the alarming or ugly reality of Malaysia's wealth gap. So you see any similarities? Yeah, 2 to 3 weeks ago, if you were here during my session, I talked about the wage crisis, right? Which is the formal sector wage distribution, again released by the Department of Statistics, expectation versus reality. Now, this is individual salaries. This is not about household income. So we normally expect employees in Malaysia to earn roughly around 7,000 to 10,000 ringgit, right at this medium level over here, right? But the reality is that we have a significant majority of the population, or rather 35% of the population, former workforce employees, they have a salary of less than 2,000 ringgit per month. And it is really similar to the distribution of household income, right? So what's next? Yeah, all this highlight the fact that Malaysians are severely underpaid. I've done quite a few posts about this already. And the minimum wage, 1,500 ringgit, is good for low-skilled workers, right? But employers, they tend to use it as a reference for all employees, whether skilled or unskilled. So this is pointed out by Economy Minister Rafizi Ramli. And he also said that a progressive wage system, which rewards workers while increasing their productivity, is needed in order to resolve part of this crisis. So in order to increase the salaries of blue collar unskilled workers, we need to implement a system that rewards workers as they get more productive. But for white collar, high skilled workers, right, engineers, doctors, etc., etc., proper policies must be enforced to prevent them from being exploited. And all these details, right, we've discussed it in the earlier part of August already during the wage crisis session. It's currently available on Spotify. So what can we do as citizens, right? I think I talked about this quite a few times also. First of all, always be eager to learn, upskill yourself, acquire new skills, be more efficient at your work. Then you can negotiate a better salary from your employer. Basically, try to implement the progressive wage model on yourself. Okay, so be more productive in order to receive a higher salary. Or look for a higher paying job if you feel that your current employer is not paying you enough. So after negotiating for a better pay, let's say your employer still doesn't want to budge, doesn't want to pay you more, then it's probably time to seek an employer that appreciates your talents. Or better yet, just go to a foreign country, work in Singapore, earn the Singaporean currency, come back, spend it here in Malaysia. You'll probably live like a king already. Okay. Now let's transition into the Malaysian ringgit. It has continued to weaken. A bad August for the Malaysian ringgit. This is the USD MYR chart over here, which showed that the greenback rallied by over 3% against the Malaysian ringgit. Now, there are several reasons for the recent weakness in the Malaysian ringgit. I also kind of talked about it last week. And one of the main reasons is the weakening Chinese yuan, because the Malaysian ringgit is highly correlated to the Chinese yuan. Therefore, any fluctuations in the Chinese currency will lead to a similar fluctuation in our local note. But the second main reason is dollar strength. Okay, you take a look at the dollar index chart. If I layer it on top of the USD MYR chart, the story becomes quite clear, right? These two charts, they previously moved one to one until they kind of split apart, but there's still quite a bit of correlation over here. And what we are seeing recently is the dollar making quite a big comeback from its 9 or 10-month low previously in mid-July. So the sudden reason for this massive comeback in the US dollar is because the Federal Reserve is looking to continue raising interest rates. Now you can see this report over here. Federal Reserve may need to raise interest rates further to cool still too high inflation. Yeah, as of I think July or probably August, US inflation stood at 3 to 4%, which is still relatively high compared to the US central bank's target goal of 2%. So Jerome Powell, he's the Fed chairman. He promised to move with care at upcoming meetings as he noted both progress in moderating inflation as well as risks from the surprising strength of the US economy. We are prepared, he said, to raise rates further if appropriate and intend to hold policy at a restrictive level until we are confident that inflation is moving sustainably down toward our objective. So basically, he's just reiterating what he previously said, which is as long as US inflation remains above our target goal of 2%, we will continuously be aggressive, we will hold interest rates high at this level, and we may even look to raise interest rates further. And he also said that getting inflation sustainably back down to 2% is expected to require a period of below trend economic growth, as well as some softening in labor market conditions. And all these factors, right, whatever he said in the recent meeting in Jackson Hole on Friday, really put strength back into the US dollar. Because, well, if you understand how and why currencies fluctuate is due to supply and demand, right? And a big factor, a big driver towards this demand for a particular currency is interest rates. Okay, so take the US Central Bank as an example. If they are forecasted to raise interest rate further for the better part of the year, compared to Malaysia, Bank Negara Malaysia has already kind of like set in stone. They're not going to raise interest rates. They're going to keep the overnight policy rate steady at 3.0%. Then you kind of know where the demand is going to, and that is obviously towards the US dollar. Yeah. Investors now seeing one more rate hike by the year end, more likely than not, compared to previously, they weren't expecting any rate hikes at all from the Federal Reserve for the rest of the year. Okay, so this is one of the major reasons why we are seeing the dollar making such a huge comeback, and at the same time, it translates to ringgit weakness as well. So moving on to the final topic of the night, banking sector. Now this is quite interesting. MIDF Research, they've maintained a positive call on Malaysia's banking sector, but they say that, hey, the second quarter performance is kind of scattered. So as an investor, MIDF urged them to be more selective with their picks. So if you're currently trading in the Malaysian stock market and you're playing with banks, right, this report is definitely for you. And there are a lot of technical jargon over here, so I'll just go through the important details. Second quarter 2023 results. Expecting a lackluster season due to NIM weakness. Though this should be priced in, potential credit costs and asset quality issues provide downside risk, possibly resulting in a weaker season compared to the first quarter and more scattered performances across the board. Now, this is for the banking sector. Also, be wary of possible loan growth target revisions. Performance expectations from MIDF are as follows. They are most bullish on CIMB, then Public Bank, then Hong Leong Bank, AMMB, RHB, ABMB, Affin Bank, BIMB, and finally Maybank. So these few banks that are listed at the far end right side of the list, right, you kind of expect some weakness for this. And this is according to MIDF. And what are the target prices? Yeah, so there are a lot of gold nuggets from MIDF's report over here. They even provide you the share price and their target price. And what is the potential upside if you choose to, quote unquote, buy the stock at that moment of time where they did that projection. Okay, but by all means, take this with a grain of salt. Don't go back today and look at this report and go like, oh, I'm going to straight away register CDS trading account, buy RHB Bank because MIDF say there's a 34% upside. All this is subject to change because the economy is evolving every day, right? So the more bullish banks that MIDF is looking at is RHB, obviously, right? Then Hong Leong Bank, then HLFG, and finally Public Bank over here. Okay, and the rest you guys will be able to see over here. So MIDF has also set its sights on Public Bank and RHB Bank, maintain strong buy calls, as I've showed you guys just now. Public Bank, due to their great asset quality, provision right back, very likely. RHB Bank, high dividend yields, capital ratio is very high. If I'm not mistaken, RHB Bank 2022, they gave like 7 to 8% dividend, yeah, excluding their price fluctuations. So as an investor, if you were to acquire RHB at one of the low points over here, right, last year, easily you would have made a 10, 15, or even 20% profit already. Yeah, but by all means, this is not a buy or sell call to Malaysian banks. It's just probably another asset class that some of you guys can go and explore. And by the way, this report is for free. Okay, and you can access this report on MIDF's website. So just Google search MIDF reports, right? Later I'll just send a link to you guys. And the first link is right here. Okay, you click inside, You scroll down, all this are all golden knowledge, golden nuggets. You guys can go and check out the reports one by one. And the reports that I like to pay attention to is the weekly fund flow report. Okay, so this one is last posted on 21st of August. Yep, right here. Okay, and this provides you a good overview on what foreign and local institutions, what they are buying right now, especially in the Malaysian stock market. What are they buying? What are they selling? Are funds flowing out of Malaysia or into Malaysia or not? Yeah, this report provides you everything. Okay, and other than that, you guys can go and check it out yourself. Thank you guys so much for joining. I'll see you guys in the next session. Bye. Good night. Stay safe.